Welcome to another Market Matters weekly video update. I'm Nicholas Forsyth, Director at Market Matters, and I'm joined again by James Gerrish. James, welcome.
Thanks, Nick.
Fantastic. I thought I'd kick things off today with Macquarie. Macquarie reported yesterday the stock was sold off relatively aggressively to begin with and then rebounded somewhat towards the afternoon. We hold that in the portfolio. I've held it for a few weeks, a few months now. I just wanted you to step our members through that result and what we're expecting from here with Macquarie.
Yeah, we own it. We've got 4% in the 4% of the portfolio in it. They came out and said that their FY17 result will be in line with FY16. That's what they'd guided previously to the trading update that they gave yesterday. The market was looking for 3% growth, so that's where the disappointment lies somewhat. It bounced off the lows yesterday. It's up again today. We're happy buyers of Macquarie at these levels, looking for a $90 price target. So we did buy it at lower levels, but we're still happy to buy it here, Nick.
Okay, we own 4%. We're going to add to our holding?
Not at the moment, no. We're targeting $90 in the near term. There's too much uncertainty from a broader standpoint, so 4% is comfortable for us at the moment. And
the investor without any exposure could really look at these levels?
Yeah, it's up a little bit where we paid for it, but not substantially so, and I think that $90 price target's still valid.
Okay. Next one I want to talk about, we bought SGR, Star, yesterday, around 4% of the portfolio. Now, that one has been sold off relatively aggressively in the last few months, partially because what happened with Crown, amongst other reasons. Now, can you step the members through our reasoning behind that buy, what we're expecting, and I guess whether you add to it in the coming weeks, months, or what we're doing?
Start bigger picture. So we've talked a lot about getting exposure to inbound Chinese tourism. 1.4 million Chinese visitors came to Australia last year. That's up around 100% in the last 5 years. It's up 200% in the last 10 years.
Yep.
In the last 2 decades, it's up around 600%. So clearly there's a lot more Chinese tourists coming to Australia, and Star's a great destination for them. It's been hit hard from a price perspective, so it was trading above $6 not that long ago. As I said, we paid $4.76 for it yesterday, a drop of around 20%. They report on the 16th. I think the market's got a little bit too bearish on their expectations around Star. They are doing a redevelopment in Pyrmont. That's going to hit earnings somewhat, and the Crown issue is going to hit earnings somewhat. I think the market's gotten too bearish of it, so we put 4% in it and happy with the holding for now.
And happily hasn't moved much today, so you'd happily buy more today.
480. We're 480 today.
Okay, fantastic. And then two more that are in our portfolio at the moment that report tomorrow. One's Henderson, and that's having a decent day today in anticipation of the result. And the other Suncorp, one of our longer term holdings. We've had that in the portfolio for quite some time. What are our expectations around the positions there? And is it the kind of thing, if they have a ripper day, we'll sell into strength, or we're happy to hold them through it?
Yeah, I mean, Henderson's been a choppy 12 months for that. We've been in and out of it, and it's been a challenging position. To set the backdrop around Henderson, you look at the funds management data coming out of the UK. UK fund managers, in terms of outflows, have had the worst year since the GFC. So it's been a very tough 12 months for UK fund managers. Henderson has probably been in the firing line because of that. They report tomorrow. We want to see more clarity around the merger with Janus. I think we will get more clarity around that. But I think above all, it's cheap. It's trading on 11 times 17 earnings. It's yielding around 5.6%, and that's based on a 63% payout ratio. So this is a really cheap global fund manager that has been through a tough time in the last 12 months. The industry in the UK has been through a tough time, and this Janus acquisition is going to transform it. So the valuation stacks up, and I guess it speaks to how we position a portfolio. We're trying to get these more unloved area of the market into the portfolio, the cheaper areas of the market, the turnaround plays that we think will do well over the next 12 months in a choppy overall market environment.
Okay, so, and investors that haven't bought that, could you buy it ahead of the result tomorrow?
Happy to. It's bounced today, but it's up 3.5% today when I left the desk, but I'm still happy to buy it. It is a higher, you buy the day before the result, it's higher risk, there's no doubt about that. But I think a lot of negativity is baked into the cake with Henderson. Awesome.
And just lastly, I mentioned it before, but Suncorp, expectations around that, what we're thinking we're going to see moving forward. It pays a good dividend. Recently has been good to us. Did sell off initially when we bought it, but what are we expecting there?
Yeah, reports tomorrow. So, you know, the numbers, it's going to be a solid result tomorrow. You know, trades on 13 times earnings, 5.8% fully franked yield. Has got some earnings tailwinds, bond yields going higher. The insurance market is starting to improve. Premiums are starting to move higher. So, you know, it's a longer term play for us. It's you know, that yield supports it, but I think the backdrop around earnings is supportive. So, happy holders of Suncorp still, Nick.
Okay, and lastly, just wanted to cover it, just Focus. Holding it for now, or are we selling?
Thanks for that. Holding for now. So it's cheap. Obviously, we'll get more clarity around earnings. There's a lot of concern. There's a lot of uncertainty around what they're going to do from an earnings point of view. But the NBN data that we see on a quarterly basis is still supportive of Focus. So for now, we're holding.
Okay, sorry to put you on the spot there, James, but thanks for that, and thanks everyone for watching. As always, any calls, questions, queries, feel free to phone us on 1300 301 868. That was 1300 301 868, or you can always reply to this email, and we'll get back to you as soon as possible.